Cryptos really took a hit after China cracked down on cryptos. It's the timing of China's announcement that's now in question.
China on Tuesday banned its financial institutions and payment companies from offering any services involving Bitcoin and other cryptocurrencies, including registrations, trading, clearing, and settlement.
China cracking down and leading to a massive plunge in the price of Bitcoin over the past 24 hours. The country responsible for 75% of crypto mining is now further banning financial institutions from providing any services related to digital currencies.
The crackdown on mining from China after its 51st meeting of the State Council Financial Stability and Development Committee that essentially cracked down on mining, and we saw that warning cast a chill, as it were, and we certainly saw the drive down on Bitcoin and even Ethereum and other altcoins down in Asia trading hours.
It has been an incredibly volatile week for Bitcoin, and this latest news from China just really hammered it again. It's the second time this week that news out of China has really impacted the cryptocurrency. First, with it saying that it wouldn't allow financial institutions to use it and was going to crack down on it more, and now with this latest news about cracking down on mining, and it's really thrown the cryptocurrency for another loop.
Did China do this, put out this crypto restriction to pump up their own currency, the digital yuan? That's the suspicion, Edward.
Yeah, and that possibly could be right. So now we have drama and intrigue along with the gold rush speculation in cryptocurrency. Bitcoin, as you mentioned, struggled yesterday because the Chinese Banking Association warned against using viral currencies. However, this is not unexpected because the Chinese Communist Party generally does not like anything it cannot control. So China's digital currency is not ready for widespread use yet. So what it does is the opposite of cryptocurrencies.
Well, the hashtag Crypto World Crushed is trending right now on Chinese social media, with a lot of investors trying to determine just how aggressive Beijing will get to try to cool off the cryptocurrency craze.
We gotta say that this is not necessarily happening in a vacuum. It's not necessarily happening in a crypto vacuum. But if you pull out to the broader economy, what's happening right now with April's Producer Price Index in a broader context is that there are real concerns about growing inflationary pressures in China. This dampening down of the speculative nature on currencies, on cryptocurrencies, is not unique to the crypto market, at least from China. They also made very stern comments on iron ore prices and other commodities, which saw a huge surge in prices.
Beijing reiterated its guidelines to financial firms as well as online payment providers, saying that they should not engage in direct and indirect crypto businesses.
The blockchain technology masks who's using the money and what it's for. China's digital yuan will allow the Chinese Communist Party to track exactly where the money goes and who uses it and for what.
3 Chinese industry bodies, the National Internet Finance Association of China, the China Banking Association, and the Payment and Clearing Association of China, said virtual currencies, quote, are not supported by real value, and railed against what they called speculative trading that is, quote, disrupting the normal economic and financial order.
General consensus here, though, is that for the most part, again, that this is really seen more as a warning, but there is a lot of bad language being used, mainly directed at Elon Musk, though, not so much at the government.
China, being a top-down government structure, really has to make sure as well that social and community stability is clear. And so there's always a social aspect to a lot of these policy-making statements.
Now, in addition, the Chinese, the U.S. is taking aim at cryptocurrencies for different reasons. Treasury Secretary Janet Yellen hinted recently at a new framework to regulate online currencies. The head of the SEC testified that Congress needs to step in and look at framing regulation aimed at cryptocurrencies. Now, he's also saying the SEC will look at what it can do within its authority. So it's a confluence of events right now. The U.S. poised to crack down to protect investors, customers of cryptocurrency. The Chinese pushing back against what it cannot control.
China has already banned crypto exchanges and initial coin offerings, but Chinese buyers can still get their hands on Bitcoin and other cryptocurrencies.
I think the main thing people are focused on is inflation and are very much looking at signs of that. And there's a question of how does Bitcoin react when we see further inflation? Obviously, we know that tech doesn't like measures of inflation rising. I think the idea of Bitcoin as a hedge is still sort of evolving, and people are trying to figure out what its price movement is correlated with most often.